just some things that we should be keeping an eye on, specifically taking a look at the Dow Jones Industrial Average right now. We already know that I believe that we are in an Elliott wave, 5-wave trend that's right about to correct. I mean really close to, and it's going to correct pretty darn quickly. My target is about, and this is according to my last post, it's around 11,750, close to that range, so I'm expecting a short-term breakthrough through these two moving averages. Okay, so in the short term, what I'm looking at right now, if I zoom into this 60-day chart by 2 hours, I have the volume right here, and we see that on the advances, we're having low volume with increasing volume on the declines, and then once again we're climbing up on very low volume, and then once again on the decline, higher volume. Okay, that makes me nervous to begin with. Second, and this is very short-term stuff here. Second, let's see, I want to get rid of that volume right there so we can see what else is going on. Here I have the RSI and the momentum. Notice that both of these, we have, if I can label a time level right here, and then right here, we have two higher highs. In the RSI, Relative Strength Index, line those exact areas up. We have a higher high, that's good, but then we have a lower one. That's called divergence. That normally happens before tops. To see what I mean, let's take a look right, see if I can find an example anywhere. Okay, this works, even though it's not as obvious. We have a high right there, and then we have a high right here, and you see as the price goes up, suddenly the RSI starts declining, and then of course after that we know what happened, it went down. So we have a divergence right there, but then in the momentum, this is what I'm especially looking at. We have a very large symmetrical triangle formation that started, let's see, at the end of November, and we're seeing that with each continuing high, the momentum index is dropping. So we're seeing divergence number 1, divergence number 2, divergence number 3, and number 4 is right here. Actually, let's see. No, that was a lower low. So only 3 divergences here. But still, that should be causing us concern. Okay, why? Let's take a look at one of my older analysis. On the S&P 500, I can go back to this triangle right here. Actually, let's go onto tradersbase.com, and I'll show you the exact post. Okay, so I have tradersbase.com, tradersbase, and we can go to the archives. Where's the archive? There it is. And go to July, and go to this. Leading momentum signals suggest a 10% market downturn. Before I estimated this downturn, when I predicted it, in here, I had this chart on the S&P 500. I'll get a big one. This was the daily chart that broke down. And earlier it broke down in the 2-hour chart. So when we see these formations that take place over a few months in these indicators, and they actually break out, that usually gives us the leading signal to the direction of the market. And normally the move is pretty large. So it's just something you keep an eye on right now. I think that this market is very weak right now, and I am not really looking forward to to seeing what happens. At this point, my positions are, I am covered call on Schwab with a descending triangle breakout. Covered call on that. I am covered call on Encana, which is also descending triangle breakout. And I have a butterfly spread on the Dow Jones Industrial Average around the, let's see, DIA. I have a butterfly spread on the Dow Jones Industrial Average at, let's see, I have a break even of about 120.69, or about 12,500 on 12,500 on the S&P, on the Dow Jones, and it's definitely a bearish move. So I'm very hedging my bets right now, and I'd advise that you do too until we see this diagonal formation or this rising wedge either prove us wrong and break out to the upside, or until we get to that target area of, like I was saying, about 117.50. All right?